That's why we restart. That's why we restart the VWAP at a new anchor point, don't we? If we start the VWAP at a new anchor point, we get a new idea about where the selling is coming in. So if I was trading gold, for example, for this move, you just mark off the highs and the lows, don't you? I mean, a lot of people wonder about where's the best place to maybe mark off the gold trade and things like that. But when you look at this, for example, here, and I say to you, right, well, what are you going to be doing in terms of momentum shifting on gold? Well, you say, well, where's the high price? So we know where the high price is because it's the high price. We can simply then go into an anchored VWAP at the high price and say, right, let's see what happens from here. So what we're looking for is basically short trades below this area on a failed auction. So the first short trade in this area, below this area with a failed auction would probably be just here. So you'd have entered a momentum sell right there, yeah? You can see it goes back above here, it goes back below. That's not a failed auction. And that's not a failed auction. We really get the first failed auction probably here. It goes back above and it goes back below here. So we get another failed auction there. And then we can see that this is another failed auction potentially here, and so on and so on. And then what you're doing is you're taking the trades below those areas as a momentum shift to the downside, trying to capture the momentum of these failed auctions below the VWAP. Now, the thing that you've got to always remember is that there's obviously a lot of buyers have come in at these low prices. So if you want to take a VWAP from the lowest low price, do so. And what you can do is you can wait for the price to get below those areas as well, so that you're using a combined element, so that if the price comes up to this VWAP area and then sells off below it, then you can sell into it. If this comes up to this area and then starts selling off below it, you can sell down into it. This comes up into another failed auction here and starts selling off, you can sell down into it, and so on. And then you're basically following the trend of the VWAPs off of different levels. In that respect, you can see just how well this whole process develops. You can see just how well that whole process has ultimately evolved. But it doesn't always work out that way, of course. But when you look at, for example, our bottom edge price, you'll see that this bottom was here. So if I draw in a VWAP from that bottom edge here, you'll be able to recognize some of the ideas that if you're not fading, this is the fade part of this trade, which is the halfback, once we go above the VWAP and then you get a failed auction, the trade would obviously be to trade away from the first failed auction, which would maybe be here or maybe be on this one here. That's still a successful auction above. So this is really a failed auction in this little phase area here. So you're really wanting to try and take advantage of either of these two moves here. And as it goes up and then it comes down and we've got a successful auction at the highs, a failed auction at the lows. When it turns back round again, we want to be buying. We want to be buying, we want to be buying, we want to be buying, we want to be buying all the way through that type of phase. Now, obviously, you might be saying, yeah, but what about the fact that it's came down from a sell? Well, we do exactly the same. We can find the high price in the sells, and you'll see that the two VWAPs meet in the middle. And when the two VWAPs meet in the middle, and you're trying to trade these failed auctions with momentum, the idea is, of course, to pick up the business when it goes above both of these two VWAPs, and that gives you the best possible chance of being on the same side as the algorithms, the same side as the momentum algorithms. And obviously what we're looking for is we're looking for all of these downticks in terms of order flow to have selling in them. Faders coming in at the top edges, faders coming in, so the delta should be relatively solid on the short side. And if they're relatively solid on the short side, it gives you an even better upside potential. Because obviously you don't want huge selling deltas, but you want to see selling deltas. That gives you a momentum lean in each of these areas. You're not trying to fade these down candles. You're leaning against a down candle, but you're trading with momentum. There's a big difference between leaning against these areas, big difference between leaning against these areas and leaning against like bottom edges. Big difference. Because if you lean against a bottom edge, the probability is you'll buy it, it'll go up, you'll buy it at lower prices, it'll go up, you'll buy it at lower prices, it'll go up. So if you're buying at these low edges and you're leaning against the trades, you're still going to have to put in a lot of work. You're still going to have to use bigger stops. You're still going to have to use bigger ideas. But if you're trading in these areas, leaning against a sell, you should almost instantly be in profit because the seller's on a bad position. The seller's on a weak hand. So this is the key, Peter. You've got to make sure the sellers are on weak hand trades. If the sellers are on weak hand trades, we know that because you're above the last two VWAPs, you're above the buy VWAP, and you're above the last sell VWAP. So in other words, the sellers must be on the weak hand on both sides. So based on that, the only trade you would take is a seller that's coming in during this phase to lean against in terms of that short directional play. Now, obviously, in terms of that, as I said, the best one to use in that type of thing is is things like your POCs, for example. They're always quite useful. If you've got a POC dropping down, you've got a POC you can lean against. Those are the types of trades you can look at and say, yep, that's the one I want. That's the one I want to try and take advantage of. But equally, there's also the possibly Voltics. We know that. There's always possibility of Voltics. There's always possibilities of, you know, a little bit of a sell lean against that 830 area. You can start looking for those types of ideas in terms of these trades, but you don't always find it. Let's just see if we had any on that route higher here in the early stages. When was it? 830. So you can see in the route higher, this is where the challenge is with this using things like Voltics and order flow, because there's usually not a lot of selling in these areas. For obvious reasons, it's a very bullish market. But one of the things you'll probably be able to recognize from that 830 is that there's no delta buying. See it? There's no delta buying above that VWAP. It's all withdrawals of liquidity because the algorithms are the buyers. The algorithms just put in literally business just to push the price. So when we look at this and we start to see these ideas unfolding, we can see the selling deltas in here, for example. Lots of selling deltas achieve absolutely nothing. So your job would be to pick up a long trade on this, for example, on a POC on this candle down here and try and buy into it. You can see there was an awful lot of selling deltas in here. Look how much selling deltas was in this area. The price was still at the top edge. It's dead easy. All you do is you pick up your lowest lean, take the price back away from those areas and guarantee yourself that you're going to make some nice monies. Now, obviously, when you start seeing the change taking place, you just reverse the process. And the change takes place, obviously, at this top edge up here. The fade comes in. And obviously, as the fade comes in, what you're now going to be doing is you're going to take away the, well, you don't really need to take away, but this one here doesn't make much of a case. Now, you can do it two ways. You can either get very aggressive with this by adding in a new VWAP from the last low, the last volume low, which was here. So anything below those two lines there becomes a sell trade. Yep, anything below those two lines becomes a possible lean for a sell trade. So when you see the price coming up into these areas, you can start working into some sells on our failed auction and reversal, and you're almost guaranteed to make some momentum money behind those types of trades. So this is what we start looking for in terms of these momentums, and you can see the momentum just kept selling. It just kept selling. You can carry on doing this from every new lower low. So a new lower low comes in here, you put it on the charts. If we go below that, we're in good shape. A new lower low comes in here, you put it on the charts. If we go back below it, we're in good shape, and so on and so on. And you just keep doing it. You just keep putting in new lower lows, put in a VWAP, and you know, and it starts drawing in the VWAP for you. And you start looking at those areas for possible sell trades. And obviously, you start getting impressions about where that weak-handed buyer is. The weak-handed buyer is when the VWAP breaks from the bottom edge, and obviously the sell's still momentum, and all you're going to have to do is keep selling down into these new VWAPs. You start the VWAP from the bottom edge, because that's the most recent thing you're forming. There's the most recent VWAP. So if I was selling if I was selling a fade, I would sell on the uptick here. If I was selling momentum, I would sell this little false run higher here, and I'd try and capture that momentum. I would try and sell into this green candle here as well, because that takes me back below the VWAP, and I'd try and sell these pin rejections here, because that takes me back below the VWAP. And obviously what you're now concerned about, of course, is what? You're starting to see volume coming in at the bottom edges. So obviously that's probably going to stop you from selling back down into those bottom edges, because you're starting to recognize perhaps a little bit of a bullish reversal starting to take place. Why would you get a bullish reversal? Because the euro dollar is starting to catch a bid, perhaps. That might be a reason. Why would you take a bullish reversal? Well, perhaps it's because of the real yields still diverging into that with the dollar bid. So you're starting to watch these two elements, adding them together and starting to recognize the possibility. When you look at the nominals, you can try and figure out from the nominals aspect, well, okay, that's my story. I don't really want to be doing too much on this too aggressively, because that would possibly even have taken you away from the last 3 or 4 or 5 of these bottom edge trades here. But that's okay. You know, that's okay, because obviously it's up to you to try and figure it out. It's up to you to decide whether you've got enough in the trade to make money from it. But obviously you're able to use your values just the same way. But instead of trying to fade trades, you're waiting for the reversal to take place, and then you're joining the party. So VWAP timed in with things like TWAP can be very good, because the TWAP obviously is the countdown to the algorithm. You know what algorithms are in play, because if we're above the VWAP, you would know that the buy algorithms are in play, so predominantly it would be the countdown to those. If we're above but the value is dropping, of course, that's a fade. You still have the same idea that you use the TWAP to try and get the fade on, and that's ultimately that's how the market develops. That's how we start seeing these reversals on things like gold and the Qs, for example, in the S&P.